Hello.
Blockchain Summit, como siempre, desde Malta. Bueno, lo esperamos en cualquier momento cuando se regularice esto de los viajes también, porque sabemos que le encantaría estar aquí nuevamente en Uruguay. Vamos a presentar a Ian, él es socio fundador de GTC Advocates, Affiliation y Caledo, asesor del gobierno, de la industria y de diversas autoridades de Malta, orientado a objetivos y con un gran interés en la tecnología, en blockchain, DLT, RoboLaw, Big Data, AI, FinTech y también en RegTech. Es miembro fundador de la Asociación Maltesa de Abogados de TI y Comercio Electrónico, Derecho Cibernético, Protección de Datos, Juegos, Telecomunicaciones y TI. Así que thank you, Ian, for being again with us here and be very welcome.
Thank you for having me. It's a real pleasure being here for the fourth consecutive year.
Well, we are
Thank
very excited about listening to your conference.
Thank you. So, is the presentation on? Okay. So, it's a real pleasure being here for the fourth consecutive year. It's a pleasure. It's a great honor. With this conference going from strength to strength. It's actually also funny. Time flies. My first presentation 4 years ago, way back in Montevideo, we still used to do the events live in those days with no COVID, but was precisely on regulating crypto. At that time, Malta had pioneered, was one of the first countries to pioneer regulation on crypto, and the regulation as well on DLT. And I was invited by the then organizers to give a presentation about the basic principles of this regulation. 4 years down the line, so I'm here again, this time it's online, and I'm here to practically describe and discuss some of the same issues we faced when Malta decided to regulate, which the European Union, which is the larger bloc within the European community, is currently facing, is currently analyzing to dish out 2 regulations to regulate the crypto sector. So if we can move on to the next slide. So in these 4 years, a lot has happened. So countries like Malta, Estonia regulated, there were several studies, there were a lot of problems in the industry, an industry which was deemed to be, to a certain extent, a cowboy industry. And the first thing which was analyzed was what, to a certain extent, what is the market, what are the activities within the crypto industry. And the activities predominantly are 3. So you have primary activities where you have the issuance and the distribution, which is pretty much similar to financial services. Then there's the secondary activities, trading, clearing, settlement, okay? There's as well the custody added to it. And there are tangential, given that it rides on technology, its main driver is technology innovation. You need support and that you're going giving a service. You need infrastructure services, you need ancillary services. So during these years and even before, okay, it was perceived that there are critical issues, there are failures with each particular activity. And through this, and countries like Malta were regulated before, you had Estonia, you had Switzerland as well, were regulated before, you had Liechtenstein. But the European Union started realizing that they needed to start to think seriously about harmonizing and doing the legislation. The next slide, please. So once they analyzed the activities and they saw intrinsic problems, they saw a need to regulate. But what were the main objectives? The main objectives were pretty much similar to what other countries like Malta, like the others I mentioned, saw when they decided to regulate. There was lack of investor protection. There was lack of market integrity. To a certain extent, the industry, with a lot of ICOs, with a lot of fraud, it was fraught as well with non-financial soundness. It was fraught as well with lack of legal certainty. So those were the main objectives. Those were the issues which a regulator and now the European body is seeing as a major problem, decided to tap into, to intervene, to create a legislation so that it could solve them. Now, this to a certain extent, we can move on to the next slide. Hello? This, to a certain extent, is pushing the crypto industry towards being totally legitimated. So let me start by very briefly jogging you through those 4 criteria which I mentioned, which to a certain extent are the justification for a regulation. So the first one is definitely investor protection. Without the investor feeling safe in this environment, without the investor doing the uptake for these new services, you will not have crypto. You will not have innovation. So there, we saw at the European level, they saw that there were a lot of issues from the fitness and proper of the operators, of the service providers. When they saw the terms and conditions to a certain extent, there were instances where even the terms and conditions were totally absent. So let alone that you have the terms and conditions with transparency requirements. Conduct of business operation was not professional. When you have an operator providing a service, particularly worldwide, based on trust, that is the least you expect. No safekeeping arrangement. Information security and technology assurance, as you all know, was weak as well. We hear of hacks until today as well, so it's daily. Imagine 4 years ago, all the hacks, the DIO incidents, all those millions being lost, savings of a lifetime for certain people. That was problematic. And that ties in as well with operational resilience. You can move on to the next slide, please. That led as well, so in this analysis, when you concentrate, when you want to protect the investor, when you want to protect the user, okay? And it is very similar to the principles enshrined in financial services. You start thinking as well of protecting the usage. So you need to have distinct patrimony, particularly because this is a new industry and it is faced with higher risk. So you need to protect the patrimony, the assets of the investor. Okay, you need to protect them as well from possible attacks of creditors, particularly creditors of the service provider. A user needs to enjoy the rights, because we speak as well about tokens. We have tokens there in the wallet. But did you check whether in the terms and conditions, the tokens are to a certain extent reflected in the wallet, because the tokens are never in the wallet, they are reflected? Did you check that you have actually ownership on those tokens? It should be. So that should be mandated. Okay. The deposits as well of customers within this environment, I call it VASAP because the FATF recognizes this as the service providers as providers. Okay. Would as well need to be segregated so that if something happens, they are protected and the investor would not lose his money. It is very similar to what happens in a bank in which you have your money. Okay. And you need to have as well governance arrangement. This is the basic minimum. If you want to legitimize a cryptocurrency service provider, if you want to legitimize this service, to bring it at par at least with financial services, you need to think about these issues. Next slide, please. This leads us as well to market integrity. So how you trade, how you put tokens on exchanges, how you prevent market abuse, all principles which we took as well from financial services. That is how you bring it at par. That's how you say, listen, you cannot discriminate just because it is crypto and not financial services. You won't allow people to do it or you ban it. So that is how you do it. You identify the problem and you try to solve it as well. Next slide, please. This brings us as well to financial soundness, which, as I said before, was very weak, if not absent in the industry. So to have financial soundness, aside from the segregation, you need to have, to a certain extent, adequate capital requirements. You cannot serve clients worldwide do transactions which run into millions, if not billions, daily, okay? Have a platform which costs millions, and then have a capital requirement of a couple of thousand of euros or a couple of thousand of dollars, it doesn't make sense. So as much as in financial services, there is the capital requirement, there is the soundness, so that even the investor knows that they are dealing, the user knows that they are dealing with a reputable company, with somebody who has a little bit of weight. This needs to apply as well proportionately to this industry, which is the crypto industry. So there you need to have licensing and supervision, and through this licensing and supervision as well, you need reporting and disclosure requirements. This even for the users. And this will be mandated. This is something which is required to have an industry to flourish. Next slide, please. This brings us as well to the last element I mentioned in my previous slide, legal certainty. And here I'm going to hone on the EU because this is my main topic, even though the same things apply right now. If you look at the United States, if you look at Asia, okay, certain countries in Africa, they are all looking into legitimizing, into regulating, and the eater of the regulation, the reason, the flaws are pretty much common in all jurisdictions. Now, the other one is legal certainty. So within the EU dimension, as you all know, the EU is formed of different member states. You have Malta, you have Italy, you have Germany, you have France, okay, you have Poland. It is imperative that if you have a service which is provided in the EU, that particular service is harmonized, very similar to what happens in financial services. So once it is harmonized, the rules, the obligations are the same, irrespective from which country you're providing the service. And if something happens as well, okay, the operator would not do what we call forum shopping. So to a certain extent, if something happens and the business is not done properly, the operator would expect that each particular regulator from the respective member states would treat him in the same manner. So if there are sanctions, the sanctions will be proportionate and harmonized within the whole European bloc. Now, this was part as well before. When we regulated through these 4 years, there have been several studies, okay, and consultations, particularly to EBA, ESMA, Text 3 reports for the European Commission. So what I'm going to discuss very, very soon is that new regulations has been cooking for quite some time, okay? And to a certain extent, in certain instances, it's more than a proof of concept, because there were studies, there were countries which regulated, and there were clear flaws which were identified. Aside from the fact that there were principles which were taken from financial services, which could very well apply to this industry, even though this industry is a little bit distinct from financial services. Next slide, please. So speaking about legal certainty, particularly within the EU bloc, the European Union had commissioned, the European Observatory, Blockchain Observatory, had commissioned a study to see the maturity of blockchain crypto regulation within the EU. And they captured 3 different instances. So you had stage 1 regulation, and stage 1 regulation was to a certain extent very introductory, very meager to a certain extent, a very lower level of regulation. You had Belgium, Bulgaria at the time, 2019, Croatia. This was commissioned by what was done by the University of Nicosia. Then you had stage 2. So stage 2, it offered a further layer of regulation, okay? Denmark, Ireland, Sweden, Italy, Portugal, some of these countries as well now have increased, augmented their regulation. Some of them even don't allow crypto right now, and that is still regulated. And then you had stage 3. Stage 3 were countries where to a certain extent, not only did they acknowledge crypto, not only did they create a framework, they started licensing, they started supervising, they started as well creating an environment, okay, which would render the crypto economy viable. So to a certain extent, any ancillary services, if you're speaking about smart contracts, if you're speaking about token creation, wallets, then STO, you start creating an environment where you inject, you put more certainty, more transparency, So even the investor there feels a little bit safe, even though this is a very new industry. So that is the state which the European Union is facing right now, okay? Before introducing these draft regulations, if you can kindly go for the next slide. This would bring more harmonization. It would bring as well a more structured approach. It would harness as well the value, the intrinsic value in tokenization and crypto in blockchain per se, because blockchain here is the main driver, okay? Within the EU. And the instruments chosen by the EU, at least the draft instruments, because we're speaking still about drafts, they are not finalized as yet. And we have two drafts, which I will discuss very briefly, are regulations, because regulations, contrary to directives within the European Union, already offer the bulk of the regulation has to be transposed as is. So that is harmonized in itself. Their member states are not given a lot of latitude, a lot of flexibility to implement or to transpose the particular provisions how they deem fit. The regulation mandates that nearly 90% of the basic content in the regulation is transposed by a certain date as is. And if not, it becomes effective nonetheless. So that is a measure which is aimed to harmonize, to regulate, to bring more certainty within the EU. Next slide, please. The first draft regulation is MiCA. MiCA is very interesting. MiCA brings about a regulation which is aimed specifically within the EU. And mind you, this is quite innovative. There is no regulation for the time being, because this is still a draft, which legitimizes, which recognizes crypto as a service and as a market. And not only crypto, all the ancillary services. So MiCA there is quite innovative within the EU, because MiCA here introduces crypto like all the other financial services provisions. So if you have e-money, if you're providing securities, if you're providing payment services, if you're providing insurance, MiCA is a regulation which will regulate, which will license, which will deal in an ad hoc manner on any crypto-related service in a harmonized manner within the EU. And in certain instances, you have as well the passportability of the service license within the EU. So here, the European Union is aiming to slowly bring at par crypto services with financial services on all facets, and legitimizing as well crypto as much as financial services is legitimized within the EU and even beyond the EU borders. So the next slide, please. One of the interesting things behind these regulations, and this is a starting point, whereas before, and I remember 4 years ago, it is still problematic right now. People speak about crypto assets, cryptocurrencies, virtual financial assets, okay? There was still a halabaloo, even stable coins, okay? Even stable coins. So now to a certain extent, we are crystallizing the differences between different forms of tokens within the crypto assets realm. And according to these different forms of tokens, whether it is electronic money token, art, which is different from stablecoin, because you can have pockets of either cryptocurrencies, money, or goods backed with an ART token, okay? The regulation MiCA will create different forms of regulation, different forms of obligation, depending on the risks attributed to each particular crypto asset. Next slide, please. Now, this classification is, as I said before, of paramount importance. However, and for people who know me, I always highlight as well the little deficiency which is still there. Here, there is a massive deficiency, because even though we've created a definition for stablecoin, a definition for art, electronic money token, virtual token, to a certain extent, the starting point is always, is the particular token a financial instrument? If it's a financial instrument and that is already regulated through MiFID within the EU, and the definition is a little bit fluid, so member states are at liberty to interpret it in a particular manner, then in that case, MiCA will not apply, and the particular services will be dealt with through MiFID. So even though we have this classification, we are still handicapped because we need to rely before even starting considering the ramifications of MiCA on MiFID. And that, in my humble view, is a very big handicap for a market which is still young, which needs to flourish, and which at the end of the day can as well challenge the existing financial services industry. Because with this particular handicap, you're harnessing this market on financial services industry. And there, different member states with different regulators might regrettably have different forms of agendas and different forms of interpretation of a financial instrument. Next slide, please. 4 years ago, we did not know, or at least DeFi was still very, very much in its infancy. Things have changed. DeFi is there. MiCA will try to capture DeFi. We anticipate that by the time MiCA as a regulation will come to fruition, DeFi will be a totally different monster, okay? Similar to what happened with the ICO. However, what is very interesting is the FATF draft recommendation on what DeFi is. And I seldomly quote ad verbatim, but here it's very interesting. So here, the FATF is looking at DeFi, and they know that they have a problem, because to a certain extent, DeFi is predominantly autonomous. And they are saying, through that particular provision, that if a software developer introduces a software which is meant to give a particular service, and it is used by people, irrespective of the fact that that particular software is autonomous, the software developer there might be a subject person. This is quite novel. Here we're drastically moving even the goalpost. I think it was unheard of that even a software developer or somebody releasing a software within a market could be deemed to be a subject person. So even here, we're seeing certain problematics which we did not anticipate before. And this is the same thing which we're facing right now with MiCA, which the European Union is facing right now with MiCA. Okay, and it will be faced as well beyond the European borders, because the FATF is of an international ambit. Next slide, please. So this brings me as well to something which is quite innovative, DORA. As I said before, here we're speaking about technology, you're speaking about operational resilience. Within the EU, this is something which was already to a certain extent present within the financial services. However, it was fragmented. So if you had insurance, you had AOPA. If you had financial services, you might have ESMA. If you have banks, you might have EBA. Okay? DORA is meant to harmonize the operational resilience of the 20 or 24 different undertakings within the financial services industry, adding to them as well to the basket through MiCA, the crypto services industry. So DORA there is meant to offer operational resilience, obligations on operational resilience, depending in a proportionate manner on the risks of the particular service provider, on the extent of the particular services offering, okay, from an operational resilience point of view, so from the technology point of view, on the particular service. And in certain instances, DORA regulates simply the technology provider, particularly when there is then. This is as well something which is quite innovative, particularly for Europe. And this is in draft form. When MiCA comes into play, it will come into play hand in hand with DORA. So there, European Union is aiming to harmonize as well the impact of regulation to make sure that what is proportionate, what is apt, is meant to cater for the problematics that were anticipated in the industry. Next slide, please. So my last 2 minutes, I believe, so I'm going to conclude very, very quickly. Because I know, yes, I know that time is precious. AML and CFT capture. Whereas before, and you can anticipate, yes, you can anticipate. So this is a novel industry, it is still nascent. People did not know where exactly to fit, what is crypto. So even from an AML point of view, particularly in Europe, the particular service, so crypto to crypto, crypto to fiat, fiat to crypto, okay, host the wallet provision, an exchange provision, they were not captured directly through AML. Countries which regulated started seeing this problem, and they made them subject to AML. As a matter of fact, now fifth AML as well, to a certain extent, is already covering some of these services. And the new iteration of the AML regulations will cover for this as well. But we don't stop there. Okay, so it's not a question of whether you license, whether the particular provider should be a subject person. We're speaking as well about something which is supranational, which is international, the FATF. So the FATF now, okay, similar to other obligations on different states within the globe, is also imposing on these states to make impact assessments. If you can move to the next slide, this is the last slide. So impact assessments, particularly to recommendation 15, okay, to analyze, to evaluate the measures undertaken on crypto services so that from a national point of view, every risk is evaluated, and if there are gaps from a national implementation point of view, those gaps pertaining to crypto. So even here, crypto is being acknowledged. Crypto is being acknowledged. It's part of being legitimated. Even there, at a national level, if there are gaps, the particular state, that could include as well Uruguay, because it's not atypical to the EU, would need to prepare a plan, would need to mitigate, and will be judged by the FATF on those measures, similar to the banking industry, to the other industries which are under the remit of FATF. So let's now come to a close. 4 years have passed. As you can see, the crypto industry, it's palpably still there with its problematics, regulations, and all the rest. However, through what we're seeing right now and witnessing, the aim is as well to legitimize it. So there is, yes, there are problems, but there are values. And when you legitimize, you harness on those values, and you harness as well on the innovation. And I will leave you with that. I thank you. It was a real pleasure. And allow me one last minute to salute my friends, the organizers. Okay? I really wished I was there, but it was impossible again this year. I wish you luck, and I hope you'll do it again next year. And a big hi from Malta. Take care.
We will be waiting for you here in Montevideo, maybe next year, Ian. Thank you very much.
Bye.
Bye bye, thank you. Bueno, Ian Gauci desde Malta, brindando su conferencia, su ponencia aquí en esta segunda jornada de nuestro Blockchain Summit Global. Vamos a seguir adelante y la próxima conferencia, bueno, en realidad es un fireside chat el que vamos a tener a continuación, Legal Tokenization, con una invitada conocida de la casa, por supuesto, aquí en piso, y también otra invitada desde Alemania.